Hey guys, what's up? Alec back with the daily stock market, and our account is back up to 50K. We're up $50 on the day. We're up $180 at one point, and I'm filming this on Sunday, so cryptocurrency is carrying us through Sunday. It went down and now it's going back up, so we'll see how it ends on the day. Now on the week, we're up $1,300, and at one point we were even up $2,400, which we will get back sooner or later here. But the past 3 months, we've been absolutely killing it, up 7%, and the year is even better than that, up 54%. In this video, we're going to be going over a very powerful earnings week that's coming up this week. We're going to go over some stocks to have on your watch list and watch for earnings this week. And we're going to kind of go over our thoughts on earnings, if it's going to be positive, negative, where I would personally buy, and where I'm personally looking to sell to. So if you're excited for this video, drop a big thumbs up if you want more earnings coverage throughout the week. Okay, so the first one we have to talk about is Tesla, and they're expected to miss earnings. So it'll be interesting to see if they go below that $600 mark again, which is very possible. You can actually see they're forming a descending triangle pattern, which is definitely a bearish pattern. And if they miss on earnings, they can definitely go down to around $580 or so a share. Now you can see I have $700. I have one whole share. We have a reoccurring buy. We have a market cap of 600 billion and a PE ratio of 643. So it's a huge PE ratio. Now Elon just put out, you remember last week, that Tesla is buying Bitcoin. So that can be bullish in the short term. Some hype around the stock can push it up a little bit higher. Now, earnings in the past have become profitable. Remember, Tesla was always a non-profitable company, but the EPS recently was like 0.9, and in Q2 2020, it was even as high as almost $2 for EPS. Now it tapered off after that, and now it's around $1 EPS. And if the actual EPS comes in above $1, that's going to be very good for Tesla. There is a good chance that they miss a little bit on earnings. So definitely have your eye out for Tesla. If they drop below $600 per share, you might want to pick some up for long-term investing. So Tesla is Monday, and then Apple is Tuesday, and they're going to be reporting earnings on Tuesday. They're expected to beat earnings, so definitely have an eye out for that. They're already up 10% in the last month, which is a large movement for Apple to be going up in 1 month's time, 10%. So they could already be factoring in some of the gains that they've been having and some of the awesome things that they have been doing. I used to have around 30 shares, but I've sold some of my profits because we were around 20% profit on Apple. I also have a reoccurring buy daily of $5 on Apple. Their market cap is now almost 2.5 trillion. Wow, with a T, guys, trillion. One of the biggest companies in the entire world. It is the biggest company in the entire world, and the PE ratio is only 33, which means it's still an attractive buy for long-term holders, and you even get a dividend yield of 0.5%, which is more than a savings account, okay? Now, in my opinion, Apple is expected to beat, but I want to buy around like 130, 135. I think it definitely will come down to those prices again. You might just have to be a little bit patient for Apple and wait for like that $135 mark. I think it's a great price to buy Apple. Now, if you go to their EPS in the past, they pretty much always beat, and they have a history of beating. So there is a good chance they will beat above $1 EPS on Tuesday. Now, just because they beat doesn't mean that the share price is going to be going up. So keep that in mind. So it's always risky to play earnings because it's not always correlated to the share price. Just because they beat earnings by a lot, that doesn't necessarily mean they're going to be going up 10 or 5% on Tuesday. Now, Visa is a great stock that I want to add more to my long-term portfolio. If I'm going to be holding for longer than 2 years, I think Visa is a great addition. They're also expected to beat earnings, which we'll talk about a little bit more, but they're up 7% in the last 3 months and 27% in the last year. So they have been moving, but they haven't been moving like 200% or anything like that. So they're a little bit more of a safer investment, Visa. I would probably want to get in closer to that $200 mark Not saying that that is possible. I definitely want to get in at least around 130, 135, 125. Anything really below 125, if you can get that for long term, I think it's a great place to buy for long term. I only have $71, so not much. I'm going to beef up my Visa position a little bit more in the next coming months, especially if there's a dip coming that we can see. Market cap is $500 million. Huge company. The biggest, I think they're even bigger than MasterCard. I'd have to double check that. But their market cap is huge. Their PE ratio is only 53. So if we can see that PE ratio around $30 or $35, it would be more attractive to buy around there also. They're at a 52-week high right now, pretty much at an all-time high also. So that's why I wouldn't really encourage to buy at the price points they're currently at. But if you can get in the middle of the 52-week high and the 52-week low, that might be a good deal to get in at. Now, earnings, they beat the last 4 earnings consistently, and they're probably going to beat again. There's a very strong possibility. But again, just because they beat earnings doesn't always mean that the share price is going to be jumping up on the day they report earnings. So just keep that in mind and play defensively. So if we see some of these stocks start to dip, maybe because they were expected to beat earnings and their earnings didn't come as good as they were supposed to be. So if Apple dips, Tesla dips, Visa dips, that creates buying opportunities with the earnings season is what I like about earnings also. So have your ear to the ground and make sure you're even putting price alerts on all of these stocks that we're talking about to ensure that you're getting in at a good price. Now, we also have TDOC on the list of companies. This is one we definitely need to see some life out of. In the last month, they're down 6%. In the last 3 months, they're down 17%. So they are expected to beat. We need to see them go up to like $158, $160 per share. I think it's very possible for TDOC to get back to just in the next few weeks. I also think that this is a great long-term buy. Their market cap's only $23 billion, so they're not a huge company. And their 52-week high and 52-week low is very massive difference. And we're closer to the 52-week low right now, which is $130 per share. Now, also, if we go down, we can see that they've missed earnings pretty consistently. They have yet to report a profit. In Q3 2020, they were very close to reporting a profitable earnings. But their last earnings didn't really go as well because they massively underperformed and reported some very bad earnings compared to what the consensus was. So I would like to see some positive momentum on TDOC closer to that $158, $160 per share level. Now, another one expected to beat that's reporting earnings on Wednesday is going to be Pfizer, and they're up 4% on the week already and 6% on the month. So they're already getting that positive momentum, and we've already invested in Pfizer a lot. We've made our profits. We sold out. But I think if you can buy this one under $40 per share, closer to that $35 mark, I think gives you a lot more leverage. Now, market cap is $200 billion, so it's still a huge company. Dividend yield, they have a nice little dividend yield, 3.6%, which is actually huge in the dividend space. PE ratio is very attractive also. So this can be a good long-term hold. I would just want to see it more at an attractive price level. Now, you can see that they have a mixed bag. They beat pretty consistently, but they've also missed. In Q4, for example, they have missed. They're expecting their EPS to be higher than it's ever been, around $1 per share. So if they report earnings and their EPS comes in above $1 per share, that can be huge for Pfizer, especially in the short term. But I think that they are more of a long-term hold. People basically know them as the vaccine company, but they have a lot more going on than just the COVID vaccine. So I hope you guys really appreciated that video. It was just a quick update, let you know some companies reporting earnings this week. Drop a thumbs up, comment below if you want another video. We'll do a part 2 of companies reporting earnings this week. If you want to join my program, if you really don't know about EPS or earnings or how we even get that or measure it or why it's important, I have a full program that teaches you everything you need to know about EPS, PE ratios, and much, much more. So if you want to take your stock market investing to the next level, DM me on Instagram. I'm accepting a few more people and I'll be more than happy to help you out also. All right, guys, subscribe on YouTube if you're not already. If you watched a few videos already, make sure it says subscribe. Drop a thumbs up. As long as you keep liking these videos, I'll keep making them for you. Also, share this video with a friend if you think they can find some value in it. All right, guys, I'll see you in the next video. Remember, don't time the market, buy the market. Peace.